Listen up, folks. Time could be running out to lock in a historic yield at public.com. But you can lock in a 6% or higher yield with a bond account. Here's the thing. The Federal Reserve just announced a big rate cut, and the plan is for more rate cuts this year and in 2025 as well. That's good news if you're looking to buy a home, but it might not be so good for the interest you earn on your cash. So, if you want to lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade bonds, you might want to act fast. The good news? It only takes a couple of minutes to sign up at public.com. And once you lock in your yield, you can earn regular interest payments even as rates decline. Lock in a 6% or higher yield with a bond account at public.com/investing unscripted. But hurry, your yield is not locked in until you invest. Brought to you by Public Investing, member FINRA and SIPC. As of 9/26/24, the average annualized yield to worst across the bond account is greater than 6%. Yield to worst is not guaranteed. Not an investment recommendation. All investing involves risk. Visit public.com/disclosures/bond-account for more info.
Hey, everybody. It is indeed time for the Investing Unscripted second Friday, first Friday when it's not first Friday live stream. Happy Friday. Hey, Jeff.
Hey, we are live. I see us.
Yeah, I see John Gallegos saying hi in the chat. Say, John, how are you?
I see John. Yes.
I believe our friend Eric DeVore is going to join us. I heard a rumor, Colin Waugh, frequent question asker and follower since the beginning, told me he's going to try to drop in too. So pretty excited about that. So got a good show planned.
I'm happy if anyone stops in live, but I like it when our longtime listeners pop in. That's always fun.
Yeah. I don't want to say BFOFs because that's been used.
Yeah, no. We have to think of our own. Hey, there's Cena. We have to think of our own name for our loyal and friendly listeners.
You know what I'll be really happy about? When Cena's done with that sailing thing and stop saying ahoy all the time.
Yeah, seriously. Jen's here too.
Just kidding. Jen Roberts is joining us. Cena, I love you. And thank you for giving me an opportunity to make fun of Jeff while also contributing to a very good cause. Cena, the fundraising's still open. Oh, there he goes. He's in pirate mode now. Cena, don't hesitate to drop the link for your donation page into the chat here. Do it. Do it.
I can't. I'll ignore it here like I do on Twitter.
There's Ryan. Hey, Ryan. Good to see you with us, buddy.
Says you're the Quaker Oats guy. I love it.
That's actually doubly ironic, right? Because I know I get it, the hair and like all the presidential kind of stuff. There's Eric DeVore. But also, I was on Motley Fool Money recently talking about PepsiCo and like how the Quaker Oats thing's kind of a mess over there right now. So I expect everything to invest
I didn't even make that connection when I heard you talking about Quaker Oats.
Yeah. Pretty good, right? Pretty good.
All right. Well,
all right, Jeff, it's 4:01. Time to do a show here, right?
Yeah, we should stop bantering and start. I don't know. This whole podcast is banter, so I guess we never actually.
Are you saying we should stop our podcast?
No.
What are you saying?
No. Let's banter officially. Let's officially banter.
All right. Shall I read us in? Like official read us in?
No, I just want to start because I'm coming in hot on something here. I need to talk about the Tesla Cybercab thing. So here's what's funny, right? So I actually have not been on social media since yesterday, right? Because it was last night. It was Thursday night.
Mm-hmm.
And so all I've read about it have been news articles, right? And people who write news articles or even Motley Fool articles, right? You try to be even keeled and not put your thumb on the scale and present facts. But it's so funny to me because like reading between the lines of like every article from like whatever, the Financial Times all the way down to a blog, everyone who's trying to play it even, you can tell just wants to say what we're all thinking, which is it was a prototype and a we'll see you in a couple years. Like, I'm not surprised the stock dropped like whatever it dropped.
9% today, down 9%, right? Yeah. On like a product introduction. It wasn't even a product introduction. All right. I want to be really careful with what I'm about to say because you came in hot. I'm going to come in flamethrower torching here. So do you remember Nikola Motors?
Yes. When they rolled They rolled the truck down the hill with no engine in it or whatever.
Yeah, I don't want to say they just rolled the Cybercab down the hill,
I mean, look, they had
but
it was a prototype of a car, right? Like, which
it's
all
based
car
on
companies
something that
do.
doesn't exist right now, which is full
Right.
autonomous driving.
Yes, but I'll give all right, so all car companies do this, right? I've been to the New York Auto Show a bunch of times, and you'll see the concept car,
But
and
they're
it
concept cars. This is a
yes,
prototype.
yes, 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 I get it. But that's basically I was gonna say, but that's basically what this is. So, like, they did what most companies do, but I wanna meet the person who went into last night truly thinking they were going to see, like, an operational Cybercab that was gonna, like
Nobody.
no, I don't know, man. I think there were some people expecting
Maybe. Yeah, you're right. You're right. I'm anchoring too much on the fact that I followed the company for a decade and
yeah, I
or
wasn't expecting
12
it.
years at this point. And so I did a video over on our YouTube channel that we published yesterday early afternoon, just kind of like, here's what investors should know about the event. And like the big thing was like really what I spent almost the entire 10 minutes talking about was look at every single time Tesla has announced a product, right? Here's when the rumors come out. A year or two later, like they announce it. And then it's like 5 or 6 years in a lot of cases before like an actual commercial product gets manufactured and delivered. And the other thing, and this was surprising when I really started digging in, Jeff, like the success rate so far, the Model S was massive success, right? The Roadster was like, it was like the proof of concept. It was like, hey, we can do it. We can build
Right.
a cool, fast, neat, sexy, interesting electric car. And that provided like the momentum to build the Model S. And then the Model S, has been the best-selling luxury sedan in its class. Not electric car, the best-selling luxury sedan in its class, right? Outselling like the 5 Series Mercedes and 7 Series BMW. Like it's a very, very good, sells a ton against
Mhm.
really, really nice, really expensive gasoline cars, right? So super successful there. The Model Y, or no, the Model 3, this is the one that turned Tesla into like a full automaker for everybody kind of
Yeah.
thing. Not complete. It's a $50,000 car, but like this is the mass market vehicle. Finally, they did that. But Cybertruck has been a flop. Semi, they sold like 150 or 200 semis, right? It's hasn't been a big success. And it's been like 7 years ago that was announced. What's the one with the gull wing?
The X.
The X, not particularly successful. I'm not going to say it was a flop, but
No, and so a lot of it depends where you live too. So, like, around here in New Jersey, in central New Jersey, they are everywhere. I would say
the X,
all of them, really. I mean, by far it's threes and Ys, like, as the most. But
yeah,
I see a handful of X's. I see a lot of S's. I see the least amount, but I still see Cybertrucks. And
yeah,
there is, I mean, if I go to the high school that my kid goes to, like, for pickup, I 3 out of every 10 cars is a Tesla, maybe even more than that. I mean, it is just they're everywhere around here. Now, look,
yeah,
we're a dense state. There's a lot of infrastructure. Like, I have a I have an EV, not a Tesla, and when I look on the app about where chargers are, they're everywhere, right? So, like, I
yep.
get why there's a lot in this area. Um, yeah, so I think it does depend where you live, but yeah, they've been successful, and I guess what I'm just blown away by is, like, why did they have to they were supposed to have this event a couple months ago, right? It was August or something, and then they delayed it to October, and like, why? Like, is it because they needed to make this fake car? Like, is that why they wanted to have the fake car? I just can't figure out, like, why you needed to delay 2 months to say this is coming in 2 years.
Yeah, and it's not coming in 2 years
No.
because they're not gonna pass regulatory approval to do commercial transportation. So, we got Simon, good evening from Berlin.
Yeah, I
Uh,
saw that.
yeah, guten Abend, Simon. Good to have you on, buddy. Much appreciated. So, big nothing burger. Like, I don't think people appreciate, like, the regulatory hurdle part of it, like, how big that's gonna be, and it's not like it's the FDA and you have one regulatory body you submit to and you have controlled testing and all that. It's going to be hard because they're talking about testing in California and Texas 48 other states, right? It's a big lift. I think that's the important thing to remember.
Yeah, yeah. So I have another Tesla related story that I hadn't even I wasn't even aware of this. I just found out recently. But apparently they've lost like 4 top executives in the past couple weeks or months. As recently I think as this week their CIO quit. Um and I think that's kind of interesting. So I read Elon the book that Isaacson wrote on Elon Musk. I read that a couple months ago and I found it interesting. And I'm not the biggest Elon Musk fan, but you have to give credit where it's due. I mean,
Absolutely
the
agree.
guy has
Yeah.
changed the car industry. He's sending rockets into space. Like he's clearly brilliant, whatever you think about his personality and his politics
Now,
and all that
whether you
stuff.
want to call it change or accelerated, the world is fundamentally altered
Right.
because of what he's
Yeah.
done. No doubt about it.
And I am a firm believer in you don't get um you don't get like great minds who are completely perfect, right? Like you have to take the good with the bad with any kind of person who's doing great things, right?
Yeah. Yeah.
Um,
Right.
but I do, he has, I don't want to talk about politics, but the fact is he's gone like whole hog for Trump and he's like all over that. And now you see like executives quitting. And I, I was a little surprised at the stock drop after this event because I don't know, I don't remember, maybe you do. I don't remember like big drops after previous events that were considered to be underwhelming. Um, because there's just so much, there's such a fan base around the company and him and the stock. So I'm just curious what you think. Do you think that there's a little bit of finally like some consequence to the non-business related activities of Elon Musk?
No, I don't. I think it's because of his reputation as somebody that is notoriously challenging to work with and to work for, is exceedingly high expectations, and the fact that he can be mercurial too. Those are all known, right? They're known quantities.
Yeah.
And being an executive at any of his enterprises is an exceptional opportunity. I think that remains the case. I think the bigger thing with me and like also trying to avoid, this sound like a political diatribe too, is I've yes, I wholeheartedly agree that every person has the right to speak their mind and share their political beliefs religiously, all those things, right? Free speech, I think, is an important tenet. It's when it becomes too big a part of the narrative and it becomes a distraction. That's when I get concerned, whether it's, in any extreme in politics or whatever, right? Anything that becomes a distraction is a distraction. But that seems like that just kind of comes with the package with Musk,
But
you know?
that you're getting at exactly what I'm wondering, right? So because I was thinking about this a lot. Um, the executives at the companies of all the stocks and all the companies that we own individually, all of us listening and you and I, um, all have things that they advocate for behind the scenes that either we don't know about or you'd have to do some research to find out. And I think it's probably best not to go down that road because whatever your beliefs are, you'll probably find that some company you really admire has some leadership who believes the opposite, right?
Right.
Um, but what you just said is kind of what I'm getting at. Like all that kind of happens in the background, right? So like whatever, pick a company, their CEO might be, you know, donating billions of dollars to the candidate you do or don't support, but you may not know about it because they're not walking out on stage with that person like Elon Musk recently did. Um, and that's exactly what I'm saying. Like it's the out
Yeah.
front aspect of it. Then it becomes part of the narrative, right? It becomes the story that draws attention. And I don't know. We don't have to keep talking about it, but I just think it's interesting. Like at right around the time that this Cybercab thing happened and the political stuff happened. Now all of a sudden, in the last, I don't know what the time frame is from the first person leaving, but he's been losing some high level executives from Tesla. Um, just I wonder if this is a
It
sign of
ebbs
things
and
to come,
flows.
or if this is just a blip in the road.
I think it ebbs and flows. I do, but I do think you're right that the narrative can only lead the company so far, and I think there's challenging. Um, it's going to be more and more challenging to maintain the market cap and the stock price and grow it from here without seeing some sort of meaningful results from the other stuff. And I think that's kind of what the reaction was given. So real quick before we pivot to the next thing, Simon says, I see what I did there? Simon says, I apologize, Simon. It's an American game, if you are not familiar with it. Musk is making Tesla less attractive to a lot of people over here in Europe. And I think there's maybe a certain amount of that in the States as well. Let's be honest, people that are interested in EVs often maybe a little more left-leaning in their politics, supporting, environmental things that don't always get the same support from people on the right. Yeah, so if you're alienating your core customer, that could be a bad idea too. But I think it's more anecdotal at this point. We'll see if it really. I mean, if you looked at their volumes, their car volumes actually bounced back a little bit, and they're growing again just a little bit. So there's that. We got a question from John. I want to go ahead and make a pass at this before we move on, and maybe we can hit some macro stuff while we're talking about it. But John Gallegos asks, are you able to provide some insight on what would cause short-term rates for SGOV, that's an ETF that invests in short-term treasuries, would continue to stay at a 5% dividend? It's not a dividend exactly, but it's close enough. It seems everyone is saying to get out, but what if they are wrong? Thank you. I can't speak to the mechanics of exactly why that particular instrument hasn't adjusted down. I can tell you, I'm a Fidelity. I use Fidelity as my brokerage, and SPAX, SPAXX, which is their money market, has adjusted down, right? So I would imagine that you will see the same thing happen with SGOV, just because that overnight short-term rate is so critical, so important. It's gonna take time.
Yeah, I don't know anything about this aspect of how the world works. However, I am a little bit surprised that if it is a short-term thing that it hasn't adjusted, because we were joking on a recent podcast how, when rates were going up, I'd get the email a month after the rate went up or whatever from my high yield savings account being like, we adjusted up. And when the rates dropped, it took like 2 days for them to be like, we've adjusted it down. So,
well, let me give you a couple numbers. So the 30-day SEC yield's 5%. Their trailing 12-month yield is 5.25. So it has come down. And then if you look at the yield to maturity, so this is the yield on the assets that are held currently, it's 4.76%. So there you go.
Hey, everybody, we'll be right back. But first, a word from our sponsors. FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company-specific segment and KPI data on around 1,800 stocks. So for example, do you want to see NVIDIA's data center revenue growth? They've got it. Do you like to track Apple's iPhone sales? They've got that too. Or how about nights and experiences booked for Airbnb? You guessed it, they've got it. And they just added around 8,000 ETFs and mutual funds to the platform. The breadth of FinChat's data is truly one of a kind. I use FinChat every single day as I'm researching the stocks in my portfolio, specifically when I want to see how they're doing on KPIs that FinChat is famous for. So to get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes. Hey, Investing Unscripted listeners, this episode is brought to you by our friends at Yellow Brick Investing. Yellow Brick is an aggregator of the best stock pitches across the internet. By tracking thousands of blogs, newsletters, fund letters, podcasts, and more, they're able to collect and summarize the best stock pitches from all over and bring them to you in one single place. Think of it like a modern value investors club. I have to say, this is pretty cool. I can just type in the company I'm interested in and get a bunch of different stock pitches from across the internet. It helps me think through new ideas and find opposing points of view on the stocks I'm interested in. And the best part is, access to Yellowbrick is completely free. Try it for yourself. Simply go to joinyellowbrick.com and search a company or ticker you're interested in. You're bound to find a great report on just about any company. That's joinyellowbrick.com. All right, where do you want to go next? You want to talk about the upcoming earnings season? Do you want to talk about particular companies you're looking at?
Let's do that. Let's hit earnings. So this was a big stat that jumped out to me. I've been really looking at a lot of this closely. I do a ton of earnings coverage for Motley Fool members, and for our YouTube channel, I'll be doing a lot of earning stuff there. But it was remarkable. I was looking on the Nasdaq's website at some earnings, and this week that's ending, around 50, it might have been like 51 or 52 larger companies that are listed, not just on the Nasdaq, but that are listed, reported earnings through today. Next week, it's like 152. So it's really, really ramping up.
Yeah. Yeah. I've, I've noticed the last couple quarters, it's really stuck out to me. Like the 2 weeks, maybe 3 weeks before the banks start again, right? And you kind of hit the next season.
Yep.
It's remarkable how different and slow the news cycle is. Like when we when we have one of these shows, where it's a little bit more what's going on in the world based, and it's like the end of or right before the next earnings season, man, it's like, whew, what are we going to talk about? Thank God for Elon Musk, huh? Um, but yeah, and then it changes like so rapidly. And you say like 100 and something next week. That's not even the big week. Like the
Oh, no,
first
no,
week
no, no.
of
That's just
first
like the
couple weeks in
first,
November are
that's just the
crazy.
first week where there's something every day.
Right. Right.
Yeah. It'll double again pretty quickly. I mean, there's like 4,000 or 5,000 companies we're going to hear from in the next short term. So my first question for you, thinking about that, next week we hear from two really important companies. I could stop there. I don't even have to say two important companies in the semiconductor industry. But ASML and Taiwan Semi, TSMC. So ASML makes the lithography machines, like their standard lithography machines, the ones that were bleeding edge, a couple of years ago, are used all over the world for tons and tons of different semiconductor applications, from memory to CPUs. There's a ton of them in China that are deployed for just making CPUs for lots and lots of different like baseline stuff that's not like cutting edge. But then you move into cutting edge and it's like, okay, 100% of their machines or 100% of leading edge chips. So basically any high-end smartphone that's been made in the past few years was an ASML machine. And TSMC probably manufactured that chips. Samsung does some, but like if you're Apple or NVIDIA, AMD, you probably are using Taiwan Semi and it's an ASML machine.
Yep.
So I found myself like really interested to hear from both of those companies because of all the stuff with China, not just like the downturn in China, but really more like the trade tensions that are still going on. And
Yeah.
then in North Carolina, that mine that flooded, the quartz mine, like it doesn't seem like anybody knows, or the people that do know, which there are people that do know, aren't really saying. Like this mine is like the largest source of the purest quartz in the world that's used to make chips. So I'm really interested to hear from those companies just to find out like all of the noise that's going on there, what's filtering down and actually affecting their businesses.
Yeah, I'm interested in that too. I own ASML. I don't own TSM.
I want a little bit
Um,
of both.
but what's fascinating to me is just the way the earnings cycle is laid out with the semiconductor companies, right? Because you always get ASML and TSMC on the front end. They're
Yep.
always that first week, and then
Right.
NVIDIA is one of the latest ones. Like we're not
Yeah.
going to hear from them until the very end of the earnings cycle. So it's really odd that the company that's you could make the argument is kind of driving the whole thing in NVIDIA is like you have to wait like a month longer to kind of hear
Right.
how they're doing.
Right.
I What's interesting, so I guess I am interested to see what ASML says, but I'm also not because they've been pretty clear over the past several quarters that 2024 just isn't going to be like a super great year. Like the last couple quarters in a row, they've specifically called out 2025 as being the year they expect growth to come back.
Yeah. Yeah. Well,
Because
because that's when so many of those latest versions of the extreme UV machine are going to be deployed. Those are the big money machines that they already have on their order book, right?
right. Yeah.
Yeah.
And
Yeah.
we've talked about this a lot. Like because of all the AI talk, I don't know that the average person who pays a little bit of attention knows that like we're actually still in the downside of a cycle of a semiconductor down cycle. Because all the noise is about AI, but absent or outside of the AI stuff, this is a
Right.
downside of a
Yeah.
cyclical
Industrial
business.
semiconductor demand is weak.
Right.
Automotive semiconductor demand is weak. Yeah, it's not a great cycle. It's been the PC market still pretty meh, right? So all of those things are kind of coming into play.
Yeah.
But no, I agree. So and Eric asked a good question. I'm glad you did, because this clarifies kind of what I was getting to. Is this mine flood in North Carolina obviously was 2 weeks and a few days ago. And you're right. This is I really want to kind of get an idea, not from ASML, right? They manufacture the lithography machines that are used to make the chips, right? So they have a ton of business supporting the machines and spare parts and consumables and like things like that. Um, but the bigger portion of the revenue is from providing the hardware. They do get a lot of services revenue, but really for me, it's more about TSMC's guidance, maybe giving us any indications, and they're going to tell us on the conference call. Somebody's going to ask, what is the situation with quartz or other things that might have been affected by natural disasters? But yeah, it's hearing about that from guidance, and specifically because I'm interested and curious. It's not going to alter like the long-term potential, but it's the sort of thing, Jeff, that I think if there's going to be a near-term disruption, you could see traders exit these stocks and could create opportunities to buy.
Yeah.
So that's kind of how I'm thinking about it.
Oh, totally. I mean, I ASML is probably one of the highest conviction stocks I own. So I always hope for a 30% drop when they release earnings, like just because I want to buy more cheaper.
Yeah.
No, but that's, again, and that goes what you just said about traders might be out. It's an important reminder that we're not playing, or most of us, I would assume, are not playing the same game as some of the biggest buyers and sellers of stocks are playing, like
Right.
a pod shop or something like that owns TSMC, for example. If they see a rough 3 quarters, they're out. They're not gonna wait that out, because they follow the company close enough to know, like, okay, I'll wait for this, crap to be over and I'll get back in later, right? They're not in it for the long haul. They're very active because they're paying a ton of attention, and they're paying a lot of analysts a lot of money to know exactly the right time to buy and sell. And that's fine. And that's where you can find those dislocations in the market that, belie the market's always efficient line that you hear a lot. So yeah, I could see a short-term challenge giving investors an opportunity to maybe buy shares at a discount.
Yeah, I would welcome that. That's for sure. All right, let's move beyond next week. Thinking again, we're getting an earnings season, kind of looking more broadly, thinking more deeply. Jeff, are there? I know there are. What's a company or two that you're really most looking forward to hearing from?
So I have a whole bunch of stocks that I'm not ever. I'm interested in how they do, but I'm not usually expecting a surprise. They're sort of like the check that everything's on track and move on kind of investments.
Right.
So the ones I'm most looking forward to are the ones where I'm waiting for something to happen. So, like, for example, I want to see an update on CrowdStrike.
Yep.
They had that outage in July, which didn't really impact the next quarter. Then they did their August release for Q2, talked
I
a
don't
lot
think they're going to
about it.
report till November, right? That's another late
Yeah, they're
reporter.
another late one.
Yeah.
So, that's a company, like, with every quarter they report for the next year is going to have some sort of relation to this outage from last July. Because,
Yeah.
first it's like, what's the impact? Then it's what's the year over year comp to the impact, right? So this will be a running story with them. So that's an easy one right off the bat. Um,
What
all
about
of my
PayPal?
real estate investment trusts I'm interested in, just because
Okay.
REITs have been so beaten down.
Yep.
I'm like excited to see when and if that turns around. Um, PayPal
Yeah.
is another one, because that's one that I've had my eye on as, like, maybe possibly having turned the corner and
Yep.
heading in a better direction. And then my two just sad stories that I will always want to see how they do: Boston Omaha and Outset Medical. I just want to know how they doing. Um, I think I don't think I will ever sell Outset Medical. I'm going to hold that stock forever, even if it.
You won't have to.
I know it's either going to get bought or go bankrupt. But
Yeah. Somebody else is going to take it out of your
there's
portfolio for
Tyler
you.
with the drinking game. I mentioned Outset Medical.
Our friend and erstwhile colleague, erstwhile colleague, is that the right way to?
I don't know.
Our
I
friend
talk
and
usually.
occasional colleague Tyler Crow. Yes, very good.
Yeah.
Very good. Yeah.
But the bottom line with all those, like the common thread that runs between all of them is these are companies where I'm excited that change has been happening and I want to see more of it, or I'm anticipating more change and I want to see if it's coming, like versus, Amazon, right? Like I own Amazon and that's going to be more of like a, yep, everything's on track kind of a thing. So what about you? What are you looking forward to? And then let's jump into the comments because we got a bunch of people chiming in here.
So PayPal as well. Yeah, I recently I started a position during the quarter because I've kind of gotten to the point too where I think that there's a turnarounds that's legitimately starting to happen. Um, and I agree with Eric DeVore. I think Alex Chris is doing a great job there. I think he's focused the business where it needs to be focused. This is a business that was kind of everywhere in payments, and they were trying to be everything, and they've become more focused. And I see that, and it looks like it's starting to show, like in the results, the transaction volumes and the revenue story maybe isn't perfect, but it's getting more profitable, right?
Well,
That's the key.
the easy, like the quick thing with PayPal for me is like the thing that I struggled with when, because that's one of the ones I bought kind of early on. Because again, it was like a company I knew, so I bought it when I was new at investing. And the thing I could never wrap my head around was like everybody I know uses PayPal or Venmo in some part of their life. How is this not doing better? Like we've talked before, we've had whole episodes about like, is being a simple minded investor better and just kind of keeping it basic. And it feels like Alex Chris is kind of trying to turn the company back to like that basic idea, right? Like, no, we have this amazing thing, right? PayPal and Venmo are things that people use and are very valuable. How do we base the business more on that? So um yeah, that's where I'm hopeful that they're gonna, turn the stock around too.
So I'd say the one company that I'm most paying attention to, that I'm really, really the most interested in seeing the results is Confluent. I have super, as we talked about, I have really high conviction in the business, especially when the stock starts to come down like it has.
Well, and you've had
Um,
that one pinned as like about to turn it. You pitched it to me about a year ago as being at an inflection point,
yeah,
about to turn profitable, about to turn cash
right.
flow positive, right? So
Yep. Well, in 2024 is the year that, I mean, they've held the line on that and say, look, we're going to be basically cash flow neutral this year. And every quarter, like you look at the cash flow results, and they do get a little bit better every quarter, like to the point now that they're positive and offsetting negative cash flow earlier in the year. That it looks like they're going to hit that, right? So the growth rates have slowed. Of course, that's one of the things with these like cloud software, non-GAAP profitable companies. Like if your growth rate's slow, the market turns on you fast, and that's what's happened. But if you really start peeling back the layers and you look at what's happening, like Confluence, which is their original software that like companies run in their on their servers, native servers that they manage in house, growth rates slow there a lot. But Confluent Cloud is still growing at like 30-40% a year, right? It's still growing very, very quickly. And they're starting to get a tremendous amount of operating leverage too. So those new revenue dollars are more profitable than the same revenue growth dollars would have been a year ago. So
yeah,
I love seeing those things. I will say this though, this is like what the stock is super deeply discounted compared to just about everybody in this space. We're talking like high single digit price to sales multiples. I know, Tyler, I hear you. I hear you groaning, mentioning price to sales. But I mean, it's just as a proxy for looking at this entire category, it's useful. Like substantially cheaper by that metric. Part of it makes sense, Jeff, and we've talked about it. Their dilution, they're still. I'm convinced they just went public probably 2-3 years before they were planning on it, because 2020, 2021 created an opportunity to do it. But they still have these grants that are pushing their dilution a lot higher than most of these companies are when they go public. So those are starting to kind of tail off, and they'll tail off over the next year and a half or so. But I think the market's just discounting too much based on that dilution and the slowing growth rates. So I really want to see what they report.
yeah, yeah. All right, let's hop into the comments here. We got one from LDP who asks, "What's your idea about SMIC? They are the biggest Chinese foundry." I don't know that company at all, Jason.
Yeah, it's a Chinese semiconductor manufacturer. they're mostly a contract manufacturer. Sure. So China in general for me has been kind of in the too hard bucket. And I do think that's a business that's going to continue to face headwinds because of all the trade um, stuff that's going on between China and increasingly the West, right? Not just the U.S. So that's a challenge, right?
Well, but let me
And
ask
when
you this, because I
yeah,
and maybe you
yeah,
don't know, because I don't think either of us follow this company closely, but like my understanding is as soon as Western countries, I'll just put us in a bucket, um,
sure.
put up the restrictions on what could and cannot go to China as it relates to semiconductors, then China just invested a ton of like government money into its semiconductor industry so that I can just kind of go whole hog into the not bleeding edge chips, right? Like
Right.
that's
No,
my
that's right.
understanding of what
That's
their
right.
response was. Like, you're not going to give us the high end machines, fine. We're just going to make a bazillion of the best low tech chips as humanly possible. Is that what
Right.
this
Right.
company does?
Yeah, I mean, they do, yeah, more of the downstream, but not just that. They do. I mean, they make some nicer, higher end chips for that are used for what's the Chinese computer company? Just drawing a blank. It's one of the big Chinese. Like it's not just computers. They make all kinds of tech stuff and infrastructure. They've basically been the DoD's banned. That you can't use their products in like high security stuff.
Oh, Huawei?
Yeah, well, thank you. Sorry, I
Yep.
just so, but they make a lot of like the stuff that connects the internet together, right?
Right.
And it's really really important. So SMIC, I'm sure they've got a good relationship with Huawei there too. But at the end of the day, like I think there's two aspects of this. Is number one, it's putting pressure on SMIC because they start losing access to suppliers, right? Like ASML. So far, it's just been like they can't service like the higher end stuff, and they can't deliver the higher end stuff into China. But there's concerns that's going to kind of trickle down. But there are other suppliers for that lower end equipment, right?
Right.
So it's not there's ASML doesn't have a global monopoly on lithography by any means, by any
It's just
stretch of
the
the imagination.
ultraviolet lithography that they
Yeah, the EUV
extreme
stuff, like
ultra
yeah,
EUV, right?
exactly,
Extreme ultraviolet. Yeah.
right. So I feel like to me, I'm thinking less about like the upside for a company like SMIC and thinking about potentially some of the downside, particularly on like the analog side for companies like Taiwan Semi. Excuse me, not Taiwan Semi, Texas Instruments,
Texas
where
Instruments.
if
Yeah, that's what I worry about. That's what I own.
yeah, because I mean SMIC is big enough where they've got the infrastructure, they've got the customer support, they're pretty vertically integrated for customers to be able to order from them. But I just my bigger concern is like for Texas Instruments. One of the things they've been doing is just expanding to move in these larger form factors, and adding capacity, things that are they say are going to create margin. At the end of the day, it could just make them more price competitive and not necessarily more profitable. So it's really going to be interesting to see how that plays out. But I don't follow SMIC closely enough to really get into details about it. But there's definitely more implications for other companies
Right.
in that lower end space.
Yeah. Yeah. Um, so Simon has a comment here. Interested in Elf and Toast. I don't follow Elf. That's the beauty company, but I'm
Yeah.
curious. I don't know that you and I have talked much about this on the podcast. So I've had Toast on my kind of watch list for a while because uh, when I look into it, when I look at the actual numbers, like the growth they're putting up and the fact that it's something I can see out in the wild, right? To think about
Yeah.
like the Peter Lynch
Yeah.
way of investing, like you go to restaurants, you see the Toast terminals.
Right.
Um, and but I guess what I struggle with is I don't feel like I'm seeing them everywhere, right? I still see a lot of Square. I still see a lot of Clover. I see a lot of Toast. And then I see a lot of brands I don't recognize or like, I'm trying to see like who it is and I can't really tell.
Right.
And that's been been the biggest thing that holds me back from actually buying shares because I just can't see it seems like one of those things where whatever you decide to go with, whether it's Square, whether it's Toast, whether it's Shopify, because I know they have a point of sale thing, um, or anything else, like what aren't they all kind of the same? I
Yeah.
don't I can't I could possibly be missing something, so or probably am missing something, so if anyone has any insight to share,
So
um,
Eric's just dropped some anecdotal evidence sees toast everywhere. John, good point about Adyen. Adyen you see more in like larger enterprise, large retail. Like that's where you
yeah.
see them a ton.
I mean, I see toast a lot, and it looks
Yeah.
cool, like, the little things that the waiters carry around look awesome, and it seems to work super quickly,
Well,
um,
I think
but I've
Jeff,
seen but I guess my thing is, like, I have also seen Square work really seamlessly too.
right. Yeah. Well, I
Um,
mean, but Square doesn't really compete as much in restaurants. Like that's less their kind of focus market. And Eric just commented, this is exactly what I was going to get to. I have talked to multiple restaurant owners, typically smaller restaurants, single location, that have moved over to Toast. And while their staff complain initially because it's change and change is
mhm,
hard
mhm,
and
mhm.
it's stressful working in a restaurant as it is, right? And you know your customer wants to ask for the if they're asking you for the bill, they wanted it 5 minutes ago, right? So you feel that stress and having to learn a new point of sale and all that kind of stuff is challenging. But it is like a it's end to end, right? It's not just the payments processing on the front of house. It's all the things they can do on the back end, managing like rewards programs, customer information, like
But
all
I
of
don't
those
think they're the
things.
only one that do that.
No, they're
Like,
not. They're not. They're
yeah,
not. But the integration, I think, is really appealing from people I've talked to, and the owners I've talked to. They've said that they say they appreciate the value, and it helps their business. Like it helps them as operators.
mhm.
What I don't know if it's a moat. In other words, does it create? Is it something that makes you better than your competitors, or cheaper, or is it a durable economic benefit that creates value for your owners, your shareholders, right? I don't know that yet, right? It's great features and it
Right.
seems cool, but to exactly your point, that's the one thing I'm not sure about either.
Well, so it's interesting you said that you've talked to people who've switched to it, because that's one of the things I wonder is, like, what are
Yeah.
the switching costs going from any one of these systems to another? And I'm sure it matters if you're like a single restaurant or if you're a small chain or if you're a huge multinational chain. Like, the seafood restaurant that my wife and I like to go to is probably not gonna switch because they're just one business and that's it, right? Like, but
Yeah.
if you're a if you're a small or medium sized like national chain and you just decide whole cloth across the whole business to change, maybe that happens. I don't know. I wouldn't have to go too deep into it.
The last point on that, but we have to hit Teo's comment. That's really really good here. The last thing is like I wonder if maybe that will be the mode is that the switching costs to move away from it, right? Maybe moving to it is one thing. You're moving from multiple vendors to a single platform. Now it gets harder to move. So
Yeah.
we'll find out. You see Teo's comment?
Yeah. Sorry, Teo. We already talked about Tesla.
For those not reading it, maybe listening to the podcast the day after, Teo says, damn it, missed the start, blasted work. Did we on Tesla yet? Yes, we did. All over it. We opened up the door to the Cybercab and we pooped in there too. But nobody will notice because customers will not be ever getting in them.
Yeah. You can listen. Well, this will get posted tomorrow on our podcast feed, so you can go back and listen to the beginning of the show, Teo. I want to
Ryan,
circle back to
Ryan sums it up in perfect fashion. Yeah, Tesla has been shat on.
right.
Yeah.
Yeah. Hey, everybody. We'll be right back, but first, a word from our sponsors. Heads up, folks, interest rates are falling, but you can still lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds on public.com. You might want to act fast because your yield isn't locked in until the time of purchase. Lock in a 6% or higher yield with a bond account only at public.com/investing unscripted. Brought to you by Public Investing, member FINRA and SIPC. As of 9/26/24, the average annualized yield to worst across the bond account is greater than 6%. Yield to worst is not guaranteed, not an investment recommendation. All investing involves risk. Visit public.com/disclosures/bond-account for more info.
Hey, Investing Unscripted listeners. My name is Brett, one of the hosts of the Chit Chat Stocks podcast. If you love Investing Unscripted, we think you will love listening to Chit Chat Stocks. On our show, we research individual stocks, interview investing experts, and, well, chit chat about investing every single week. From hot stocks such as NVIDIA and Celsius to hidden small cap gems, we have something for every type of investor. Follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts and start discovering new investments today.
I want to circle back to the other company that it was Simon, right? That Simon mentioned. Do you follow Elf
Yes.
Beauty at all?
I've looked at their last couple of earnings, and I think it's an interesting company. I'm not really good at a lot of like that kind of consumer goods stuff. I've never been good at like getting a feel for the winners.
Yeah.
And again, it's like I don't know how to recognize like what's there. Like I know the products are very well thought of, and they definitely have loyalty. But
I
man,
think
that's a crowded space.
well, that's and
Yeah.
what
I feel
I've
like I would need to
noticed-
know Estee Lauder and L'Oreal, whoever owns them, and like the other 10 or 15 companies that are publicly traded in that space, to really be able to objectively say this is why I think Elf is the winner. I don't.
it to me, again, not a world I live in, but it seems like it is people are loyal to like the brand they like. So like, for
Yeah.
example, I was interested in Ulta Beauty for a while. I never bought it. And there were some aspects of that, the growth they were seeing. And I thought it was smart that they were like putting themselves inside Targets, I think.
Yep. Yep. The mini
But
stores.
then I asked my wife about it once and I said, I was like, hey, I'm interested in this. What do you think about the company? And she looked at me and she goes, I don't care. I'm a Sephora girl. Right. Like
there you go. There
that's
you go.
her brand. And
So
then
is it like Ford and General Motors truck owners? Is like Ford and
I
Chevy?
think
Is it like, is that
maybe.
what it
I don't
is?
want to speak for women, but that's what my small anecdotal evidence told me that. But even my friends who have daughters who like are in that teenage, interested in makeup phase of their life.
Yeah.
My friend's daughter, she got a gift card. We got her a gift card, I think for Ulta because that was like where she liked to go.
Yep.
And I'm sure for some other people it's Elf Beauty, so like again, that's what holds. It's the same thing with Toast. Like I don't understand how that's the winner in the space. And maybe it's a big enough space. There's multiple winners. But it's just not an area I've looked deeply into.
Yeah, I will say there's some interesting comments going on about you and Elf eyeliner and which shade you would look best in. And Eric DeVore notes that I'm not indeed not a 15-year-old girl, so it checks out that I would not be able to identify that space. I've also never been a 15-year-old girl, so
That we know.
that's right. Ryan's got another one here. I think we covered. Those were the only ones that Simon mentioned, right? Those two.
Yeah. Yep.
Eric DeVore drops in SoFi, interested in SoFi as well. So dilution, that's another thing that continues to pressure SoFi stock, especially for a bank. It's a tech company too, right? So dilution is certainly a challenge. I think the performance of the business is exceptional. And they're also another company that's made that transition to profitability. And they're really about to accelerate that too. So the concern has been so much of their loan book is consumer loans, like either student lending or personal loans, like unsecured debt. That's the risky stuff, is unsecured debt. So it's not viewed as safe like a JP Morgan or a Wells Fargo that has a bunch of mortgages on their books. I'm interested to see what's going on with SoFi too.
I don't follow SoFi because I don't like in banks at all. So here's my question. Isn't SoFi just like a bank that people are excited about?
I mean, I think that's a little short-sighted when you start because you don't follow banks and you don't take the time to go to the FDIC and like dig into their financials and what gives them some advantages. There's a thing about SoFi that's a lot of it's timing, but it is a big advantage. If you're Wells Fargo or Bank of America, or Truist, especially of like the little bigs, Truist is one that like they have a ton of mortgages and mortgage-backed securities that are yielding less than 3%. And they're like 25 years out from maturing, which means they can't sell them because they would have to sell them for such a massive discount. They'd book multi-billion-dollar losses to do it. So they're just stuck with these low yield instruments. So they really have to push hard to keep their deposit costs low, right? And not raise yields on checking and savings accounts. So it makes it harder for them to grow because they have a lot of encumbered capital that they have to keep just to continue to cover these low yielding loans. Because of the way SoFi started with those mostly adjustable rate, higher yield personal loans, and then their student loans, which are also generally a little bit higher rate or higher yield too, they don't have much of a mortgage portfolio at all. Like their average yield on assets is like 9%. Like it's super high. So they
Wait,
can
hold
they
on.
can pay high yield and start expanding like their mortgage book. Because even if they're paying 4% yield on deposits, they're writing a loan for 6%, 6.5%. There's plenty of meat on the bone there for them to still be able to make money. And it's just harder for a lot of the legacy banks to do that. So they're just their balance sheet has them better positioned to be able to grow across a full spectrum of lending products.
I understand all that.
Okay.
I,
So
what
what's your
I'm
problem?
what I'm driving at is banking and the bank sector and banks seem to be, to me, the place where you don't want to be investing in the one everyone's excited about. Because in the end, they're all banks. And I would imagine there's another bank out there that is maybe similarly structured to SoFi, at least to some degree, that's a little less trendy, that may be a better opportunity.
So I think you're wrong.
Okay.
SoFi is interesting, but I wouldn't say that investors are particularly excited about it. I mean, the trades for most of this year are traded for about 1.25 times book value for an internet bank. Doesn't have a bunch of branches.
Yeah.
And they've got their fintech product, which is probably worth 2 to 3 times book value, right? So if you start adjusting the value of that out of their business, like you're probably paying book value or less for like the banking business. And then if you look at like Live Oak Bank, just as an example. So again, an internet only bank, or Axos Financial, which is an internet only bank.
Or Ally, something like that.
Yeah. So Live Oak trades for like 2.2 times book value. Now they've also got some equity investments that they've made. So you factor that out a little bit and it's a little bit cheaper. But Axos trades for 1.6 times book value. So I would say SoFi is fairly to undervalue, honestly.
Okay.
Yeah. So, but good question.
All right. I think we've gotten to all of the important questions in the chat. Right now, it's about women's
Can we talk
beauty
about
products that
Teo
are sold.
Solaplex?
Um, we're kind of nearing the end here, so I think we should pivot and talk a little bit about the portfolio contest because
Yes.
this is our
Yep.
first opportunity. We're actually at the end of a quarter, not even the end of a month. So we actually have a quarterly winner to announce, and we have a charity um, that I don't know if we have the charity from this person. So we'll have to reach out. Or wait, how did we decide we were doing this when a an audience member wins? I forget now. But anyway, I keep burying the lead here. Craig, our listener, Craig, he was actually the winner of Q3. His portfolio was up an average of 13% for the quarter. So that's not year to date. That's just Q3 alone. For comparison, the S&P 500 was up by 6%. But that was pretty, other than two other people's portfolios that were close, one at 12%, one at 11. That was a pretty good win for Craig. This is all available on in a link on our show notes. But real quick, Craig's portfolio here is Alexandria Real Estate Equities, Aritzia, Endava, Fiverr, PTC Incorporated, LiveRamp Holdings, Spotify, Upstart, and Viva Systems. So a pretty eclectic mix there.
Yeah. Upstart did the heavy lifting.
Yeah.
Was up 70% last quarter. I want to say this too. I like Endava. Sadly, Endava's gone down every quarter since the beginning of the year. But especially at these prices, I really like Endava a lot right now. So I think that's really interesting.
Yeah, I own Endava. That I actually, let me put that on my list of companies I'm interested when they report. They're a later one too, I believe.
Yeah. Yep. That's right.
But yeah, I've struggled with it because I just feel like consulting is a thing you can push off when times are tough, but
Right. Yeah.
yeah, they are ridiculously cheap right now. So it almost feels like it's worth investing in it from that standpoint alone. Just for to mention, I did calculate the September winner, and that was Tyler, our friend
Tyler
Tyler
Crow?
Crow, who was quick to point it out to us on a recent chat we were having with him.
He didn't mention the quarter. He did
Uh,
not mention the quarter.
no, he did not mention the quarter. Um, so this is you can I see someone's in the spreadsheet, but you guys can check this out. It's in the show notes
That's me.
of the episode.
That's me.
The I don't have any like big takeaways here. I mean, my portfolio is still trash, like it usually
Well,
is.
no, I won the quarter backwards.
You're- you won for worst place.
Yes. Yes.
Congratulations to you, buddy.
That's right. That's right. From first to worst, buddy. Let me tell you.
But
I'm
so
like the 1997 Marlins.
first to
Win
worst.
the World Series and then sell off everything and replace it with a bunch of junk.
Yeah.
That's my portfolio from last year to this year.
What this has got me thinking about, other than your baseball reference, which reminds me that the Mets are headed to the NLCS and the Braves are out of the playoffs. But
Fair.
it's funny to me how long yet how short a year is and can feel, because like I don't think I'd pick. And I'm sure some of this is hindsight bias, but like I don't have the same level of conviction in about half of my portfolio as I did back in December when I picked it. Um, and it feels like a very long time ago. But we
I
won't
made a
get to.
very bad decision.
Yeah, you kind of bought. I feel like you were just trolling for things that were beat down, and it turns out they all got more beaten down.
Yeah, no, they were down for a reason. So,
Yeah.
let me say that. So I've got two stocks that are down almost 90% and one down almost 75%. One stock that's up, and of that list of stocks, this is the one that I would have said I don't think it's going to be up at the beginning of the year, and it's up. So investing is weird. And of that list, I can tell you there are three companies. There are three that I have conviction enough in their businesses that I would buy the stocks today. And that's Enphase, SoFi, and probably QuantumScape. And QuantumScape is like still a lot of risk there. But none of the others would I say I have anything close to the conviction to buy today.
Yeah. I want to defend our honor here a little bit because our listeners are giving us some well-deserved ribbing in the comments about how
Wow.
bad our portfolios
And I
are.
just got hot. I
It's
just clicked on
pretty-
the comments and it just
yeah,
scrolled.
it's pretty rough. It's pretty rough. Tejo says maybe you guys should start should start shorting stocks. You seem pretty good at picking the ones that go down. Solid burn there, Tejo.
Well done,
No,
Teo.
but all right, I'm gonna defend our honor and plug our Savvy Trader portfolio.
It's
which
doing
isn't-
well. It's beating the market.
We've been doing it since the end of April. There's 14 stocks in there, I think. And we've been beating the market since April. And it is I only bring it up because A, I want everyone to subscribe to it so we make some money. But B,
Yeah.
it is funny. We take that way more seriously and carefully than we do the portfolio contest, which is more about having something to talk about for a year and giving some money to charity and stuff. But I do feel better about our collective ability to pick winning stocks based on the Savvy Trader portfolio because we do put a lot of thought and effort into that. So
Well,
I
you know
guess
what
maybe
makes me feel pretty good about my my ability to pick stocks? My portfolio over the past 15 years.
you're such a turd.
Yeah. No, it's true. I mean, there's a reason I'm able to buy bonds now. And it's not that I'm a bad stock picker.
All right. Everyone, you can just skip forward past all this arrogance coming from my
I
co-host
love
here.
the comments. That's the one thing I will say that's missing. Not being able to say. There's just so many. We just can't read them all. But you guys are lit, and it is well deserved. Trolling and dunking on us.
If you're listening to this later and you've never checked out the first and sometimes second Friday live stream, it's worth it just for the people making fun of us. To be perfectly frank.
Yeah, no, I agree 100%. Yeah, Eric DeVore, pretty good here. This is literally just a Vegas parlay initiative. Every single bet you make that you think will win, just do the opposite. Yeah, and here's a good one. In the words of David Gardner, of course, Motley Fool co-founder, pretty decent stock picker in his own right. Winners keep winning. Losers keep on getting picked by Jason Hall.
That's
Well
great.
done.
This is
LDP,
great.
you're right. That is fire. And you think it felt personal. I'm the one named Jason Hall. Yeah.
All right,
Yeah.
I want to wrap us up here last couple minutes with I want to step back to the macro.
Okay.
So one of the news items that crossed my desk this week was that earlier in the week we hit another all-time high in the market, and it feels like 2022 feels like a very long time ago now. So I'm curious, how do you feel about the market where it's at now? It's funny, like it's funny how you can be in a time when the market's hitting all-time highs and it feels super bubbly and frothy, and you can be in a time where it's hitting all-time highs and it doesn't.
Yeah.
And it doesn't feel as bubbly and frothy to me now as it did maybe a year ago. Um, Even though it was kind of still the same kind of market. So I'm just curious kind of where you're seeing things headed and how you're feeling about everything.
I've talked about it before, but I basically always feel like we're about a year away from a recession. And I still feel that way right now. I literally have felt this way since I really started investing. I think part of it's because, coming out of the financial crisis, that's when I really started picking individual stocks and really looking at them. So like I was constantly looking over my shoulder, like waiting for the recession to happen. Um, but I've always tried to invest with the reality that I'm an idiot when it comes to that sort of thing. And, guessing the macro is hard, and generally useless, right? Because I always circle back around to that, like focus on my goals, like know when I'm going to need however much for what, and invest with the right tools for that. Having that framework surrounding me so that I think through my investing decisions has been so freeing for me that I can constantly worry about a recession, yet also still make good decisions that aren't forced errors. And it seems like it works. But like, what do I think right now? Like, we keep hearing like the betting markets and the actual like futures markets, which are basically betting markets when it comes to things like what is the Fed going to do with rates, shifting its, if you were to ask, I don't know, 6 weeks ago, they'd say, yeah, we're going to see another jumbo cut, another 50 basis point cut. And now like the odds are that it's going to be 25 basis points. And then we get some of the economic results where it looks like consumers, especially like the ones that are kind of more paycheck to paycheck, um, are kind of pulling back. You hear from Pepsi and like they're not selling as many chips as they used to. You like it's there are signs that the consumer that has the money, like Carnival reported, and like they have their best year ever, and like their backlog for next year, they're on track to have their even better year next year. And it feels like the consumers that have money to spend on discretionary things are still spending it. But the companies that are focused on just your everyday average person, maybe they are feeling the pinch a little bit, right? And
But
that
I feel like
does,
but I feel like that's been what those companies have been saying for like 2 years now. And yet here we are. I guess that's why it feels odd to me, right?
yeah,
It's, you know, me remembering or having the feeling sorry, me experiencing companies on earning calls saying our results were not what we expected because the consumer is just being price conscious. I feel like has been something we've heard since the 2022 downslide started. And it hasn't really stopped. And then and then at the same time, there's been this constant recession is coming. We're not going to get the soft landing, blah, blah, blah. And with every passing quarter, Fed meeting,
yeah.
earnings season, it seems like we've dodged that bullet. So it almost feels to me like we're going to get to a point where everyone feels really good, and then that's when we're going to hit the
Right,
downslide because
right.
it's been all doom and gloom and like expecting a recession for 2+ years now, and it just doesn't happen. It's just very odd.
Jen's going to give us a channel check on Carnival. Thank you, Jen. She's got 3 cruises left this year with Princess. So there's that. Eric DeVore called it out. Look at Dollar General, right? They're really, really struggling. And then the flip side, you look at TJX, which is TJ Maxx and some of those brands. It's like it's you have the business that sells to people that are hand to mouth, and then you have the business that sells to rich people that want stuff cheap that's blowing it out. Right.
Yeah.
It is a wealth inequality thing. I think you're right, Eric. And as an investor, it's tough to kind of square that circle or circle that square, whatever the euphemism is.
Right.
So,
Well, you messing up a euphemism is a perfect place to end the show.
you know what we call that? Just another show. Jeff, this was a great time. I want to say thank you to so many people that came on. I feel like this was one of our more involved chats. If you have not done one of our first Friday live streams, you should check out one of our second Friday live streams because it seems like that's what they've become. But we definitely want to get more of you on here live when you can and jump in the chat and participate. If not, keep listening to the replay on your favorite podcast channel or your favorite podcast app, or of course on YouTube. Jeff, I think that's it, right?
That's it.
All right. As always, these are our answers to these questions. We sure love to give them, even when they're wrong, apparently, just like my stock picks for our portfolio contests.
Yes.
But you know what? You can come up with your own wrong answers and you can make your own wrong stock picks. You don't need my help for that. You don't need Jeff's. I believe in every one of you. You guys can do it. All right, Jeff, we'll see you next time.
See you next time. Thanks, everyone.